All right, you want to start? You want to dance?
Okay.
Want to do a little dance?
Sing a little song?
Just a little doot.
Okay. Do.
Hey, what's up, Super Simps, and welcome back to another episode of SimplyPodLogical, a Simply Logical podcast. Today's episode is brought to you by Holo Taco. You can stop doing.
Down and Time it right.
Okay, today's episode is brought to you by Holo Taco. Holo Taco just came out with a matte top coat. It's very exciting. You put it over nail polish. It has a mattifying effect. You can check that out at www.holotaco.com. Speaking of mattifying effects, we have mattified the podcast today. I'm joined by my brother Matthew, Abstract Matt on Instagram, Matt. Cristine obviously is not here today. She's taking a little break, I've imposed a vacation on her, and really she's just busy working on something else you'll hear about kind of soon. A little surprise coming next week. It rhymes with boats. So
Goats.
Goats. She has a goat collab coming out.
Adopted a goat.
But I thought it would be fun. I feel like the biggest story on the internet last week, a big meme, and it's kind of broken through to the mainstream, and it hasn't just been some memeable Reddit thing, is what's going on in Wall Street Bets right now. Mm-hmm. People who listen to the previous podcast with Matt, you may know Matt from a podcast where we talked about traveling and math and things like that. No.
Fun.
So, Matt, you are a mathematician. Do you describe yourself as a mathematician? Is that a label I could put on you?
I feel a little bit bad sometimes. I sometimes say I'm a former mathematician.
Oh, I see.
But I'll take it.
And are you willing to say that you work in finance in some capacity?
Yeah, I feel like this is a thing that people have figured out.
That's a dirtier word than mathematician, don't you think?
Oh, yes. Yeah. I used to sort of like half apologize. I never saw myself ending up in this industry, but, I've made my peace with it.
Well, you're an interesting. You've kind of dabbled in finance. I know you've done some like computer science stuff on the side. You're kind of
everything's connected to everything else.
Or a Renaissance man, many talents, right?
Shucks.
So yeah, I thought we could have a conversation about this Wall Street bet situation, and maybe take a few steps back and have a more general conversation about investing and things like that. Nothing we say should be construed as legal or investing advice.
I'm not your financial advisor.
Yeah, I'm not your financial advisor either. Neither of us are qualified to do that. But okay, Wall Street Bets. I'm going to try to describe what's been going on. I'm going to try to really dumb down the situation because I think it's actually pretty confusing, and most people talking about it don't really understand it.
Definitely not.
So GameStop is a company where you buy video games.
Yeah, we don't have GameStop here up in Canada, I don't think.
Yeah, I guess we have
I don't buy a lot of
games.
video games anyway.
I mean, there are still places you can physically buy video games, but the point is that most people don't buy physical copies of media anymore, essentially. So a lot of people are saying GameStop is like the Blockbuster of today. Mm-hmm. Blockbuster was a place you used to rent videos, and clearly that business model fell out of favor or wasn't profitable anymore when people can just stream movies on the internets. So GameStop is similarly, the prospects of its profitability into the future don't look great necessarily. Mm-hmm. Their share price has been going down, just sort of naturally, I believe. And some hedge funds notice this. Investors are aware that GameStop is maybe worth betting against the value of GameStop. So a bunch of hedge funds and other investors have shorted GameStop. So I think this is the first sort of touch point we kind of have to unpack. What does it mean to short a stock? Most people, when they think of the stock market, they think of just like, I buy a stock because I think that company has value, and if that company gets more valuable, my stock will increase in value too.
Right.
But there are all these other sort of financial instruments or ways you can invest or bet against companies. So I'll let you unpack shorting.
So much,
here.
a lot of technical terms here. Hedge funds, shorting.
Okay.
Can we assume that people know what shares are?
I have a share. There's a pie.
What is it,
there are 8 slices of the pie. I have a share of that pie.
Yeah, you're like you're buying a piece of a company.
Yeah.
You can say that like I own a little bit of I don't know, whatever company you like, Apple. I own a little tiny piece of Apple, very tiny piece.
And you have no voting or anything like that.
Well, you get votes, but like
I guess If I just have a common share in Apple, am I voting on like Apple's directors or board of directors?
You can. Generally, you can.
I guess people just don't do this, right?
Yeah, I imagine like most people, it's not worth their time because like you have like one out of I don't know how many millions or billions of shares of whatever.
So your vote doesn't matter.
Yeah,
Right?
and then there are some like Google has two different kinds of shares, and some have votes and some don't. It's very complicated, but we won't get too much into that. I don't.
Did you say oats or votes there? I think you might have said oats.
I said goats.
But okay, I think most people have at least a basic understanding of like I invest in a company, I benefit from that company going out in value.
Yeah.
But I think people's understanding really goes down as soon as you talk about like other sort of instruments like puts and options, shorting, and all that sort of thing. So maybe we should at least define what it means to short a company and also cover like what a hedge fund
Yeah,
is.
sure. Easy. Okay.
Okay.
All right. So, shorting, normally when you talk about buying shares, you buy a share in a company you like and you think is going to become more valuable in the future because eventually you're going to sell it and you want to end up with more money than you put into it in retirement or whenever else. So shorting is a way to make money if you think the share price is going to go down instead of up.
Okay.
So what you do is you go to your friend or someone and you borrow a share from somewhere. Doesn't really matter from where.
Okay.
So let's use a concrete example. Something like not shares. How about like bananas? So something relatable, right?
Good. Yeah, let's dumb this down.
So let's say you think the price of bananas is going to go down. Maybe you think next week there's going to be a sale on bananas.
That would be good news for me.
Exactly. So here's what you do. So you go to your friend who has lots of bananas. So I'd go straight to you.
Okay.
Yeah. So and I said like, hey, can I borrow a few dozen bananas? Because I know you have at least like 300 in the house at all times.
Yes.
So I borrow some bananas and then I go and sell them. And then when I return the bananas to you next week, I go buy them on sale. So they cost less than I got selling them the week before.
That's right.
So when I return the bananas to you, they're different bananas, of course, but the bananas are basically all the same. Yeah. So I make money because I sold the bananas for more than I can buy them back for the week after when I return my debt to you. So you can do the same thing with shares.
So you can do the same thing with shares. And I guess the argument is, and maybe you can correct this for me, is that it serves a function in the market in terms of regulating the price of things. I guess here's sort of the first place where I'm maybe going to project my own opinion on this. There are investors who are famous for shorting companies, famous, I don't want to throw out any names. I don't really know what I'm talking about. But like the idea that someone like a hedge fund can take out a short position on a company, betting against a company. Essentially what you're doing is you're betting a company is going to fail or at least lose value. The fact that investors can take these enormous short positions, in which in the case of GameStop, there were some that were, I think, more than 100% the value of the outstanding shares of the company.
That's
even
a strange
This
thing.
seems like a very predatory thing. And I think it's reasonable to say that some of these people who short companies try to manipulate or are actively participating in trying to make the value of that company go down.
Right.
So if I'm a famous guy and I short Apple because I think Apple's share price is going to go down because people are less excited about the next iPhone, I might go on MSNBC or whatever media will have me and try to convince other people that Apple's not worth as much money. And if Apple does lose value, I profit off of that. So it all kind of seems a little gross to me, honestly.
Yeah, I get it. But maybe I've just drank the Kool-Aid of the industry. I've been working for 5 years. But
Okay.
So if you well, when we say position is just like a fancy word for investment. It's the industry term for investment. So if the opposite of a short position is what's called a long position, when you're buying the stock and you want to make money from this price going up, you're doing the same thing. You want to yell as loudly as possible, like, "Hey, I'm a smart investor. I just bought a bunch of banana shares, and I think everybody else should follow my lead because I'm really smart. You should do what I do." And then if people buying bananas causes the price of bananas to go up because of supply and demand, and then my long position has gone up. So I don't know. It's no more morally repugnant to me. If it's being manipulated, it's getting manipulated in both directions.
So I completely accept that it can be manipulated in both directions, but I do see an ethical distinction, and maybe I'm just a big softie. But I think the idea of betting against companies to me just seems kind of weird in general. And I think a lot of where people are coming from is they have less sympathy for people who lose on a short position or get squeezed. We'll get into that. But I think the next thing then is, so what is a hedge fund? So if hedge funds were the people shorting GameStop, what is a hedge fund? Because most people, I think, are just immediately picturing the Monopoly man
Yeah.
Some billionaire
It's
figure.
basically right.
Is that fair to say, right? Because a lot of like, if you buy into an ETF or some sort of other fund,
So many technical terms.
okay,
Calm down.
So. There are other vehicles of investing, I guess, that you could say represent just a collective of people who aren't necessarily all millionaires and billionaires.
Yeah, sure.
But hedge funds specifically, my understanding is, tend to represent people with a lot of high net value, and they take advantage of more tricky or diverse or different sort of methods of investing in things.
Yeah. So hedge funds have like a fairly innocent history. Okay. And I should have read up on this as, when I was doing my homework for this podcast. Professor. Yeah. So they've been around for, I don't know, I'm going to say something like 100 years now. And so hedging is a technical term in the investment world, which means to sort of protect your investment from kind of unforeseen negative consequences. So when people talk about hedging their portfolio is, so if you have a lot of investments in one sector, you might want to hedge that by buying a little piece or maybe a larger piece of something that will do the opposite of that one. So maybe if you have a lot of like stocks like GameStop stocks or like retail businesses, like physical stores.
Sure.
So if you're worried that like people are going to stop going to physical stores because maybe there's some sort of pandemic going on, maybe you could also invest in some online stores, which is where the people would go instead.
Sure.
So
but
that
this
you're
is
a little
basically
bit
just
protected.
Diversifying your portfolio.
Yeah, but hedging means not just diversifying, like specifically investing in something that's going to move in the opposite direction.
Oh,
was the first one, yeah.
Oh, okay.
So then the very first hedged funds were designed so that they would make money in any market environment. So sometimes, the markets kind of on average in general are going up.
Sure.
And sometimes they're going down. And you talk about bull and bear markets and these kind of things, depressions and recessions and blah, blah, blah. So the point of the first hedged funds was that they would make money no matter what the markets were doing. So if the markets were going up that year, they'd make money. But if they were going down, they'd make money too.
It kind of sounds like magic.
Kind of. It's like alchemy.
Okay. Yeah. But I guess it's fair to say, because how these are being described in the broader media conversation, specifically around this story, but I think more generally, is that it represents like billionaires getting together and investing in these funds.
So this is the history of these. But then the point of these is to be able to make money no matter what the market environment is, then you have to be pretty clever. It may or may not be even possible in the long term. But the people who are doing this are the people who think they are the best investment managers. And they're probably not even going to accept your investment if you don't have like $1 million to give them. Gotcha. They're just not interested in your money. So
there's probably just a very high floor to being able to invest. I can't walk into the bank with like $50 and be like, I want one tiny share of your fund.
They're just it's not worth their effort. Yeah, if you only have like $50 to invest.
Yeah, totally.
They don't care about you.
They don't care about me. Maybe should we disclose? I do not have a position in GameStop. GameStop, right?
GameStop? I get this wrong every time.
I'm getting mixed up. Isn't there's a website called GameSpot?
Sure.
Maybe?
Yeah, I don't play the video games.
You don't play the video games? I grew up watching you play the video games.
I don't know what happened to me.
You became a real...
Yeah, I became an adult. No offense to people who play video games.
So to return to the specific case, so GameStop value going down, short sellers, hedge funds, betting against GameStop.
So we got to talk. So first of all, shorting is dangerous because if I buy a share of Apple Computer Company or a banana or whatever else, I could lose my investment, right?
Yes.
So like if I put $100 or whatever Apple costs right now, in theory, Apple could go bankrupt and I might lose my entire $100. But if you can only lose $100, you can only lose your original investment. Yes. It makes sense. But if you're shorting something, this is not true because you're borrowing a share, you're selling it, and eventually I have to return that share to the person I borrowed it from. So if it's at $100 now and I sell it for $100, I get that $100. Eventually, I have to buy it back. I have to buy another share so I can give that one back to you. Yeah. But it could have gone up to any amount. It could be $200 or $1,000 or $10 million. It could be any price.
Theoretically, there's no limit to the loss, I guess.
So there's no limit. You could lose like an infinite amount of money shorting shares. And like most people are never going to short stock. Like, anybody can do it. But most people are never going to do this in their whole investing lives. Yeah. And most people probably shouldn't because it's dangerous and scary.
Yeah. So I guess this is kind of hinting at what happens next here. And people may already know this, but So these hedge funds that have this huge short position in GameSpot, some interesting characters on Reddit, on a subreddit called wallstreetbets, noticed this. And I don't want to ascribe any intentions to them or anything like that, or suggest they were colluding to do this. But I think it's pretty clear part of their motivation was to almost be like punitive against these funds taking these short positions. That's reasonable to say, right?
I think, yeah, right? I think, I don't think it's a hot take to say that some people out there for sure are specifically trying to bankrupt hedge funds.
Exactly, right? And spoiler alert, but some hedge funds have reportedly lost billions of dollars in value in this as of right now. This is sort of a few days after everything went down and Robinhood made that decision. We'll get to that. But so essentially these people on Reddit get together and just say, like, let's just buy a bunch of GameSpot. Let's inflate the value, whether they're buying stock or buying options in it to increase the value. There's a few different ways of doing that. But it was putting all these hedge funds who took this short position into exactly that sort of like that trajectory towards that huge loss position. If the share price is going up and up and up, all of a sudden they have to buy back the share to repay. And all of a sudden they have billions of dollars in losses. And to see the sort of reaction to this in the media and everything has been incredibly fascinating, because like you see like these establishment investing figures on traditional news sources sort of trying to make sense of this, and like they don't really know how to treat it, I find. So you've had like billionaires giving interviews on like MSNBC, like almost breaking down as like how terrible this is. But I would say overwhelmingly the sort of response you're seeing more like on a cultural level from Twitter, from politicians both on the right and left, is to sort of like embrace this as like a little guy beating the billionaires kind of story.
Sure, yeah.
That's overwhelmingly what we're kind of hearing, right?
That's a really politically convenient position to have, and it's nice, I guess. I know AOC and Ted Cruz were both, tweeting about the same thing, right?
Yeah.
So if they're on the same side of something, it maybe tells you.
Yeah, AOC's response to that was pretty funny too, where she's like, "Didn't you try to have me killed a few weeks ago?"
That's I'm not going to touch.
Let's not comment on that. But okay, so just to sort of wrap up the story, I guess these hedge funds are presumably going to lose billions of dollars if the price of the stock keeps going up. A bunch of Redditors in a bandwagon, and it's gaining momentum. The price of GameStop's just continuing to go up. And then overnight, I think on Wednesday maybe, or a few days into this, some of the brokerages that a lot of individuals use, like Robinhood and a few others, to be fair, basically started limiting the ability of people to buy GameSpot stock. They were only letting people sell their current positions and not buy more. Most people's assumption and speculation is that this is being done because Robinhood is trying to protect the interests.
They're hedge fund masters.
They're hedge fund masters. They're investors. Maybe they're owned by a hedge fund. They have some sort of relationship with a hedge fund in terms of how they actually place their buys.
I don't know how deep we want to get into this.
I think it's worth giving a bit of a nuanced take here. I know you have one. We talked about it before, because I understand the anger and a lot of people's just assumption that this is Robinhood basically intervening because billionaires were losing a lot of money and they'd rather protect the interests of those people over their customer base. That's the assumption. But I think there's a lot more gray area than that, right? Yeah. So what's your take on this?
Is it okay? Can I walk it a few steps back first?
Totally.
Let's talk about...
Do the moonwalk.
I'm going to talk about shorts. I don't know how to do that, but I'm going to talk about short squeezing. Okay. Yeah. So we kind of alluded to this, but so shorting is dangerous because you could lose any amount of money because the price could go up before you have to, return the share.
Yeah.
It could go up by any amount. Yeah. So, but there's the danger, the squeeze, I think, is important here, because this is another risk you take. So let's go. If you go back to the banana example. So if I
squeeze the banana and it pops out of the banana?
Yeah, you squeeze the banana, it pops right out of the banana, right. And then who knows where it goes. Okay, kids at home. That's not their financial lesson. Okay, so to go back to the banana example. So if I have shorted a lot of bananas, so I borrowed a lot of bananas and I sold them because I think the price is going to go down the next week. So you might notice this and say like, hey, like I know this guy is going to have to eventually return these bananas. So if I buy up all of the bananas at all of the local grocery stores, which causes the price to go up because the demand is going up and there's only so many bananas. So like the stores can't stock the bananas. You create scarcity, so the price of bananas goes up. And then I owe the bananas to you, and you notice, like, hey, like, you owe me some bananas, and the price is going up. You'd better go buy me those bananas right now. So then I have to go buy the bananas at prices that are skyrocketing. And then since I'm buying bananas while they're already scarce, they're just becoming more scarce, more rare. And that causes the price to go up even more. And if a lot of people have short positions in bananas, a lot of people have borrowed bananas and sold them, everybody has to buy back bananas. And if everybody's doing this at the same time, it causes the price of bananas to skyrocket. This is called a short squeeze.
Yes. So we're really running with the banana analogy. But so
just stick with bananas.
Short squeeze. Okay. Yeah. That's a term you might hear a lot. That's actually an easy way of digesting it. Yeah. So that's what happened here, essentially. Yeah, right?
So this happens all the time, actually. But what's interesting here is that instead of like hedge funds noticing that some other hedge funds had big, dangerous short positions that they could exploit by squeezing them, a whole bunch of people on Reddit noticed that hedge funds had shorted more shares than existed publicly in this company, which is weird because it means like...
It's kind of strange that can even happen.
Yeah, right? It just means like, so like... I shorted some bananas from you, and then I sold them to my buddy Chris.
Sure.
And then Chris lent them to somebody else who did the same thing, and then shorted them from him.
Yeah.
So it's the same banana can just get shorted over and over and over, you know? And then like Steve owes a banana to Chris, and Chris owes a banana to me, and I owe that banana to you, and it just goes on like this forever.
Meanwhile,
you know?
people owe people hundreds of bananas, even though there's only
though there might have only been
bananas in my kitchen, right?
The original banana could get lent to people over and over and over and create lots of debts. Yeah. A single banana can create lots of different banana debts.
So if you are any investor shorting a company or some hedge fund with like some of the smartest people in the room and representing the interest of billionaires, you have to know that there is a risk when it comes to short selling and know that there's these unlimited losses, right? You do. So I don't think anyone should necessarily have sympathy.
I don't have sympathy for the hedge funds who are struggling now financially. Like they made a bet. They should have known the risks because in theory they're sophisticated investors. Yeah. And if their bet failed, then that's too bad for them. They should take it on the chin and move on. But that's what they did, you know. Well, the big one that everyone talks about is called Melvin Capital, and they got rescued. But you know, like they're getting punished. You know, like it's not like.
Didn't that guy come out too and basically say they weren't going to take short positions anymore?
Yeah, there was a different something called Citron Research. Okay. That was a famous short seller and would publish these short reports to tell other people to short it, which is of course in their interests if you take their advice after they've done exactly that. They said that after 20 years they were never going to short things again.
They were going to short, And like to be like I'm spanked. I have investments in things too. Don't do it. Never occurred to me to short a company and try to make money that way. And I've gotten tips on shorting things before. It's not something I would personally be comfortable doing.
I'm not comfortable doing it because the risks are you could lose an infinite amount of money.
Right.
You know, I don't have the same moral opposition to it that a lot of people do. But I get that, you know, like people like it seems like predatory and awful to make money off of other people's misfortune, which is essentially what you're doing.
And I will say, like, I actually, I think I might have a slight disagreement with you that I think some people have almost been asking us to feel sorry for the short sellers in this position. If we're talking about this sort of like legacy media figures on investment television who are just trying to characterize these Reddit investors as a bunch of trolls just trying to sow chaos in the market or purely doing it for punitive reasons. I guess maybe that's not wrong. But like the way these people have been coming out and complaining, I think the sort of context to this matters, right? I think you have a lot of people who remember the 2008 housing crisis, which was largely an invention of the big banks. Okay. You're seeing the current context of we're in the middle of a global pandemic. And the markets are doing great. The rich are absolutely getting richer. If you have a stock portfolio, this year has not been bad for you. And meanwhile, there's lineups for blocks of people in major cities in America waiting at lines at soup kitchens, right? So to see billionaires get on TV and complain.
I don't know why they're doing these interviews. You know, like
it's super tone deaf.
Nobody is going to have sympathy for these rich people because they lost some of their money or even all of their money. You know, like you took a chance and you lost. And I don't know why people are putting them on TV. They must live in some sort of bubble where they think like, you know, this is the game we're playing. And someone came in and played a strategy we didn't expect, and then I feel like they shouldn't be allowed to do this. I don't know. I don't really want to get into an argument about whether or not what Reddit is doing is market manipulation. that law is vague and weird.
I was about to say, yeah, we don't have to go here, but I think that it will be very interesting to see if there's any legal fallout from this, because yeah, it definitely doesn't fit a very cookie cutter definition of what it means to collude to inflate a share price necessarily in a way we would traditionally think of that. But I think we're absolutely going to see some sort of fallout from this. And the fallout we have already seen. I think we should talk about this whole Robinhood situation. And they have unfortunately become like the face of this, even though it is a number of different brokers and some banks that basically started limiting people's ability to buy GameStop. And a lot of people just assuming or speculating that's because they're serving the interests of billionaire hedge funds who are losing a lot of money instead of their everyday Joe who just wants to buy shares using their app. So I know you have a bit of a different take on this in the sense that the CEO or president of Robinhood, I don't know the guy's name, he's done sort of the rounds on media, and I think he's done a really bad PR job.
Yeah, that guy needs some media training.
It's been pretty horrendous, right? So what is the explanation for why Robinhood or any other brokerage under these circumstances would limit people's ability to buy a stock like GameStop?
Yeah, I don't have a good, easily understandable banana analogy for this one, unfortunately.
We can leave the bananas behind.
Yeah. But so it's the situation is complicated. So when you're talking about stocks, it's a highly regulated industry, the financial industry. So I'm not buying a banana from you personally. There's a bunch of people in between us. There's like my brokerage, which is where you buy and sell the stocks. And then that brokerage talks to a clearinghouse, which is sort of collects a whole bunch of different stock buy and sell orders and processes them. And then they talk to what's something called the DTC, which is a private company, which sort of keeps track of where all the stocks are essentially. And then they will talk to the buyers. The seller has these people working for them kind of behind the scenes, and the buyer does too, or whatever, both parties have these people working for them. So there's a lot of different steps in between the buyer and the seller. It's not just a matter of like exchanging a banana for a dollar bill with you, you know? And at any spot along the way, those people can impose some restrictions on the buying and the selling from you or your brokerage. And we don't really know what happened with Robinhood or anybody. Robinhood is not the only brokerage which created these restrictions. A lot of them, like TD Ameritrade is like a really big one, a big legitimate like traditional brokerage that did the same thing. Robinhood is getting all the bad press for a specific reason that maybe we'll get into. But
is it the name Robinhood?
Well, that doesn't help, you know. Like when there's like, you know,
your whole ethos of your company is to like benefit poor people. And
steal from the rich and give to the poor. And it seems like they're doing the opposite now, but we don't really know. We may never know. You know, we might not ever find out what really happened, but. There is an alternative explanation where one of the intermediaries that Robinhood works with kind of forced them to put up enough to kind of lodge, to kind of like put a whole bunch of like a big pile of money somewhere just to guarantee the trading, and they just didn't have the money to be able to do that.
Yeah, so if that was the case, though, I would think Robinhood or someone would want to throw someone else under the bus and say, like, the clearinghouse we use was just all of a sudden imposing fees because too many people were trying to buy this one stock all at the same time.
The CEO of Webull, another one of these kind of hip millennial brokerages, gave an interview on Yahoo Finance where he did exactly that. He said, like, look, it's not our fault. The DTC told us we had to do this, essentially. Like, we had no choice.
Yeah.
So, and I don't know, that was to Yahoo Finance, so maybe that's a more sophisticated audience than the CEO of Robinhood on CNN. But
maybe, and you make a good point. Unless there are like congressional hearings about this or something, and even if there were, I don't know if we'd ever get like a real answer here. But yeah, it wouldn't surprise me if either thing were true or both things are true. That just the costs or some like down road implications of allowing people to just buy this one stock over and over again was having real practical, logistical, regulatory consequences for them. Or is it the case that they do actually have a relationship with some hedge fund that was basically encouraging or nudging them towards limiting people? Because, you know, I'm sure Robinhood does have relationships with other people in the financial world, right?
Well, so Robinhood is getting blamed specifically because Robinhood doesn't charge you for buying and selling stocks on their platform. They instead make money by kind of essentially selling your data to a market maker. But and one of their market maker customers is called Citadel Securities. And the hedge fund that rescued Melvin, which is the hedge fund that got killed on this short squeeze, is called Citadel, and these
Also called Citadel.
they used to be the same company, and now they're separate companies.
Okay.
But it's easy to look at them and say, like, they have the same name, they have the same history.
I mean, are they separate companies in the way like I could create a holding company tomorrow for my company, and all of a sudden they're two different companies, but are they really different companies?
There's what's called a Chinese wall. This is still the technical term.
Okay, that's not an offensive
It seems
term.
kind of racist, but people are still using it. Maybe one day we'll fix this. But there's sort of a firewall is another way of putting it. Like these companies should not be talking to each other.
I see.
And they're separate businesses. So, like if Citadel Securities does well because the hedge fund does poorly, they don't really care about each other anymore. Okay. Like maybe there's some overlap of interests, but I get it. It's easy to look at this and think like, here's two companies that are at least, like attached at the hip here. Yeah. And it looks fishy. I get that the optics are bad, but it's not some of the conspiracy theories are a little out there.
But I mean, is it that conspiratorial just to think like you don't have to imagine like a bunch of billionaires twirling mustaches in a room, right? To necessarily think there's some sort of manipulation going on or ulterior motives, as opposed to regulatory reasons why Robinhood.
I mean, hey, it's possible, like it's not obvious why Robinhood would want to help hedge funds because Robinhood's not really making money from hedge funds. Hedge funds aren't using Robinhood. Robinhood is for the little guy who's buying like 2 or 3 shares at a time, not people who have millions or billions of dollars. But
other than the hedge funds who've lost billions of dollars, the worst outcome for anyone in this situation probably will be Robinhood. I don't know how they recover their reputation from this.
No kidding.
Right?
And I think it's probably, it's at least possible that this is not their fault, and they've been thrown under the bus.
They've sort of
like
become
the
target of this like class warfare type conversation.
I really think Robinhood wants to let you buy and sell as much GameStop stock as you want
and make money. Off doing that, right? Okay.
Anyway,
all right, that was a long rabbit hole. I think it was important to have that conversation in that way. Hopefully, that was digestible and not just a complete maze or overly complicated way of I guess just so much of what I'm seeing online from people I really like and respect, like even like Phil DeFranco, who generally will unpack a story in a way that makes a lot of sense, I think really has sort of stuck at this very superficial level of it just being against billionaires against the little guy. And I'm sympathetic to that sort of narrative and putting that lens on it, and I think it actually is somewhat appropriate, but there is a sort of level of nuance here that I'm not hearing.
There always is, and I'm also shocked. I had to really go out of my way to try to find even an industry take on this. It's
no one wants to go out of their way to defend billionaires.
Yeah, I know it's tough,
And like fuck hedge funds anyway. Right? That's kind of my feeling on it. I have no sympathy for why do hedge funds really exist?
Well, let me recommend you a book called More Money Than God by Sebastian Mallaby.
Okay.
Which, if you want a defense of hedge funds, there it is.
Do I want a defense of hedge funds?
It's my second favorite finance book.
Oh, that's interesting. Okay, I'll check it out. All right, maybe now is a good time to maybe take a bit of a step back now that we really drilled down on that one specific example, just to maybe have a broader conversation about investing that maybe could be to the benefit of the people listening to this.
We did this in the opposite order.
We kind of did this in the opposite order, but I think that like an initial clickbaity topic was what people are talking about.
Get the people in here, and then now we can talk to them about TFSAs and Roth IRAs.
I don't know, like we're not here to give people investing advice, but it occurred to me when I thought we should have you on to talk about this, that when I was like 20 years old and had a little bit of disposable income for the first time, I had no idea what to do with it. I realize this conversation might seem a little tone deaf these days. I'm not sure. I know a lot of people are going through a hard time economically, but still, if you're making money for the first time and you have some money sitting in a checking account and you don't know what to do with it, I think it helps to have some resources to or hear someone having a conversation just about that. A lot of people who listen or watch this podcast are in their 20s, so they're maybe making money for the first time. And when I was that age, I remember walking into a bank and some guy convinced me to buy a bunch of mutual funds of that bank, which means it was basically a product of that bank, and it was very much in their interest to sell me that product. I was paying like high management fees for them to invest my money for me. Yeah. And it was only years later that I sort of came to the realization that I didn't have to rely on those sorts of instruments or those sorts of products, right? So maybe we could just have a little bit of a conversation about if you have money for the first time, don't know what to do with it, and you're interested in investing in the stock market, how can you just sort of do that yourself, or if that even is a good idea? Do you have a similar experience? Like, do you remember for the first time sort of realizing you could invest your money yourself? Or?
Yeah, the first time, maybe when I was an undergrad and I was working, I was working since high school, so I had a little bit of disposable income, and I just put it all in a savings account. In Canada, we have these things called TFSAs, which are some tax sheltered accounts, so you don't have to pay tax on the interest you get on your. At the time, I just had cash savings. And in the States, these are called Roth IRAs. It's essentially the same structure.
Gotcha.
As opposed to RSPs, which are like the American 401ks.
Yeah, more for retirement. It's just in terms of like when you're paying tax on it. But I guess just to really dumb it down for people, if you take anything away from this, from my perspective, is like, I remember finding resources eventually. I know there was a blog called like Canadian Couch Potato Investing or something like that.
They're great.
Yeah, I think they still exist even, but it basically just taught you that, there are ETFs, exchange traded funds, that typically have very little fees you're paying to the institutions that manage them. And if you just have a very simple way of sort of balancing how much maybe you have one that represents the Canadian industries, one that represents US, maybe one's North America, maybe you want some global exposure. But they'll even sort of guide you, and you want maybe put 30% of your money into this one, maybe only put 10% of your money in emerging markets. And with very little effort, you can sort of manage this yourself through having some sort of, you obviously need to set up an account somewhere where you can invest directly, which the major banks typically let you do, but that's why you have all these third-party apps like Robinhood and stuff like that as well, right?
Well, we could spend a million hours talking about this kind of stuff, and I don't really want to have to explain what emerging markets are. That's an advanced topic. Right?
Sure. If anything, I just want people to take away from this that,
don't go to your bank. Don't go to your brick and mortar big five bank. Don't go to Citibank in the States or TD or CIBC and tell them I have $50,000 or even $2,000 that I want to invest, because they're salespeople. The people you talk to at the banks are salespeople, and they're there to make money for the bank, and they probably have some sort of bonus structure where if they sell enough of their high fee mutual funds, they get some Tim Hortons gift certificates or something, right? They have incentives. Yeah.
This isn't an argument against having a financial advisor by any means, right? Cristine and I have a person that helps us manage money these days, and that guy has a fiduciary responsibility to us, meaning he doesn't have an obligation to sell his bank's products to us. He has an obligation to make decisions in the best interest of his clients to make them money, essentially. Right.
Yeah, well, I not everyone is a fancy person like you with a financial. I don't have a financial advisor.
Okay, yeah, I'm not saying it's something that's open to a lot of people necessarily either. I'm actually not sure about that. What sort of threshold is there to having?
There's the kind of the couch potato type advice these days is to find a fee only financial advisor, someone who will charge you a few $100s to give you some advice, and he's not making money based on the kind of investments that he's going to tell you to invest in. He's not getting any kickbacks from the kind of stuff that he's investing your money in.
Interesting. Okay.
Yeah, he'll just going to charge you a flat rate, so you can trust his advice because he doesn't have these sort of perverse incentives. He's not incentivized to go give you high fee mutual funds. Gotcha. He'll actually give you actual honest advice.
I should say we have someone who helps us manage money now, and a lot of that's just from I don't know how specific I want to get here. If you're investing in things through a corporation, there's other implications from a tax perspective I think you need to consider. Whereas if I was just investing my own personal money, I'd probably be more inclined to do that myself. And I should say, it's interesting, when Cristine, I think she'll be okay. When she first started making some money on her channels, we didn't really know what to do with it. So I basically started just investing that money for her myself.
Yeah, someone's got to do it.
Right? Yeah. You don't just want it sitting in a checking account, just losing money to inflation over time. But then it occurred to me a few months into that, it started becoming an amount of money that I was not totally comfortable with doing myself. And also just from a relationship perspective, it was like, hey, if I make a bad decision with this money, I'm like the boyfriend of the YouTuber who blew her riches.
Sure, yeah.
So I just for the sake of our relationship,
I get it.
I just didn't want that responsibility anymore. But it was interesting in their sort of search for someone to help manage the money. we sort of accidentally fell into a meeting with a bank at one point. Like we were just there to like open some new account, and all of a sudden we got sort of ambushed by these bankers who I guess saw us as like two relatively young people,
naive,
that had a decent amount of money just sitting in a bank account because we hadn't figured out what to do with it yet. And it really, I can vividly remember how gross it was because they were assuming we were just idiots and didn't know anything about investing. And they were basically trying to sell us all those products on which they make those really high
people are
management fees.
Used car salesmen. And like, I can't really be mad at them because, you know, for a long time, this was the only way to invest your money, was to like go to your bank and tell them you had some money to invest and they would help you do it. But now, like, one of the great things the internet has done is sort of democratize basically everything, for better or worse. And now that there are these sort of couch potato, this phrase we keep using, approach to sort of investing, where you can do it yourself. Or there are services which are called robo-advisors, which are meant to be sort of like a compromise between mutual funds and going and buying your own units of index ETFs, if that means anything to anybody.
Replacing your financial advisor with a robot, is that the future?
I think we've given no useful advice here. So we are not financial advisors.
No.
But once you have saved up enough money beyond like a few months of your expenses, everybody should have a small emergency fund.
Yeah, I agree.
And after that, if you're saving up for a car or a house, or I don't know, like even like a PS5 or something, then, you know, just keep your money in a savings account and try to make as much interest as you can. Again, the physical banks are going to give you bad interest rates. Probably need to go to some sort of online only bank. And after you've taken care of that kind of stuff, where you have some money you want to invest for either retirement or like a house purchase down the road, then you could think about investing your money in stocks or bonds, kind of the kind of standard investment vehicles that are available to people. And then you can think about things like robo-advisors or low-fee ETFs. But you'll want to do some homework there and be very careful about who you trust for advice, because a lot of people are in it for their cut.
Yeah, no, I think that's fair. And that, in a nutshell, is the advice I guess I'd want people to leave with here. Just in terms of an investing for dummies thing, I don't know if we want to open this box necessarily, but I think it's worth pointing out, like, when you do this sort of passive investing strategy that's sort of advocated for on Couch Potato and platforms like that, where essentially what you're doing is just, you know, you're buying these ETFs or these funds that basically give you exposure and give you a diverse portfolio of access to a lot of the value across the markets, right? Not sure a simpler way of explaining that other than basically the performance of where you're putting your money in that will basically just align with how the overall economy is doing.
Sort of the opposite of hedge funds, to sort of bring everything full circle here.
Yeah.
So hedge funds are going out and buying things and selling things and shorting things and trying to make money by being smarter than kind of the average guy. But there's a lot of good academic evidence going back decades in the markets that this is basically impossible to do consistently. Almost nobody, and maybe actually nobody, can make money by making a lot of clever trades over and over and over. So probably the best and certainly the safest advice is to just buy an index, which is just like a tiny piece of basically every company in maybe the entire American market, the entire Canadian market. Maybe if you particularly like, I don't know, like clean energy stocks, you could focus on that if you want. But instead of like buying a stock and then selling it when the price goes up and then buying when the price goes down, don't worry about that. You can just buy an index fund, which owns a tiny piece of a huge number of stocks, and then you're only going to get the average market performance. But there's a lot of data that says that the average is the best you can reasonably expect to do.
Over time, right?
Yeah.
Over
like the decades until retirement.
Exactly. You have to know there's sort of a time horizon you have to keep in mind here. And your sort of own sort of psychology, like a lot of the times if you sign up with a financial advisor, if you're in a privileged position to be able to do that, one of the first things they'll make you do sometimes is actually like answer a sort of quiz to gauge your own psychological,
legally required to make you do that.
Your comfort level with risk and just how risky a person you are. So even if you're young, you should be able to make a bunch of risky decisions because over time, hypothetically, that should even out.
Presumably things will eventually go up.
Yeah, right. And a lot of people say like on average, if you have your money just, I guess, a pretty balanced portfolio of equities or in these index funds, they used to say you could count on on average getting 5% return every year.
Something like that.
So if you have $100,000 invested, 5% of that every year will come back to you without you having to even touch that $100,000. That's not going to be true every year. Some years it's going to be down, some years it's going to be up, right? You can't just look at it as pure income, but that's a pretty safe calculation to make. I think the thinking on that is still the same. Maybe they want you to be a little more cautious these days.
People
4%.
are advising for like somewhat more modest expectations due to some macroeconomic factors that are definitely too boring to get into right now. And it was like just on that topic, like I'm sure there are people now thinking like this all sounds horribly complicated. Why should I even buy stocks at all? Why not just keep my money under a mattress? But there is a good answer to that. In the long run, in the last hundreds of years, the stocks have been the best investment in general, like on average. I'm sure you could find like weird flukes of history that you could have made more money than on stocks, but for almost everybody, generally, stocks are the best things to invest in when you have enough money that you can afford to take some losses once in a while.
Yeah, and if you are the kind of person who wants to like pick individual stocks and your friend
go on
gave
Reddit
you a tip
and see what Wall Street Bets tells you to buy. AMC is the next one.
Like if that works for you, that's great. But I feel like most people aren't that. It's kind of like
I don't have the stomach for that.
Did you ever read Zen and the Art of Motorcycle Maintenance?
No,
do you know that book?
I was just told that book was terrible. Actually, was it good?
Yeah, I didn't love it, but there was one little nugget that sort of stuck with me through that. Is like there's people who just want to drive their motorcycle and they want their motorcycle to work. Okay. It goes vroom. I drive down the road.
Yeah.
And then there's the people who really need to take it apart and understand every little piece and thing working inside that. I think most people are the former. They just want their motorcycle to work. They just want to put their money somewhere and know they can go to bed at night and not worry about it. And then I think there's other people who are very much more interested in the mechanics of actually themselves trying to beat the market by guessing whether this X company is more profitable than others. That's not really for me, I guess. I think it's not for most people.
And that is the argument for, expensive mutual funds is that like, just give us your money and then you won't have to worry about it. But maybe I hope the takeaway from this podcast is that there are cheaper ways of not having to worry about it than your bank's mutual funds.
Yeah. And if you're someone who's like into investing in like cryptocurrency and stuff, I have to think
that's a whole other podcast.
That's a whole other topic. But the value there to me is just like that is something you enjoy doing. Because if you're doing that purely from like a...
Yeah, you have to I don't know. I'm sure there are people who don't care about I think the vast majority of people who invested in Bitcoin don't understand how blockchains work. And that's fine. They have some investment strategy there, I hope. Well, other than assuming it's going to go up.
I don't know if that... I've talked to people who are super into crypto and the impression I get is the same as you, that you're counting on other people speculating on the value of cryptocurrencies.
That's pure speculation.
Not anyone seeing like inherent value in any technology that isn't just like, the blockchain technology could just be co-opted by any financial institutions. And we're seeing some banks doing that, right?
Make their own cryptocurrencies?
Yeah, or just there's other ways of using blockchain outside of...
There's lots of cool applications of blockchains. I think like Walmart was using it to guarantee that their organic mangoes were truly organic mangoes.
Okay.
like supply chain security. Yeah. There's lots of cool blockchain.
Okay, maybe this is too much of a rabbit hole to even explain what blockchain is. But essentially, people who are really into cryptocurrency, and they've sort of like... I'm not saying you won't make a bunch of money on it. I know a lot of people who have. Yeah. But I think you're making a lot of money on it in a very speculative... It's basically it's one step short of gambling in my mind.
Yeah. It's like if you buy a banana or a share of apple, there's something behind that. A fruit or a company that's making a lot of money selling computers.
Yeah.
Apple is like if they're not going to go bankrupt. Even if they do go bankrupt, they'll be able to recover some money out of bankruptcy. There's some value there.
Sure.
And there's no reason that a Bitcoin should have any value as opposed to any other value. It's
probably triggering. There's probably like
more people are buying it than they're selling it. That's why the price is going up.
There's like a dozen people listening to this freaking out who are going to send me a bunch of articles about how there's some inherent value to some cryptocurrency.
How can you argue that there's an inherent value?
I'm not making the argument.
There's lots of arguments that the price is going to keep going up and that maybe it'll become the world currency, and you can argue that if you want.
Do people actually believe that though?
I think so.
Or that it could meaningfully... Yeah, I guess it really depends. Do you think people will meaningfully start using Bitcoin to actually transact?
Yeah.
That's not the case right now at all.
I don't. And even if you think crypto will eventually become sort of some sort of dominant world currency, there's no reason it would be Bitcoin specifically.
Yeah.
I mean, maybe something better will come along next week.
And if that happens, we're probably taken over by like lizard alien people or something.
Yeah, sure. You know, then like, how do you invest in a lizard alien world domination government?
Maybe they like bananas.
Yeah.
We got my stockpile. Okay. Want to wrap up with a little quick segment? People bored at home.
Yeah,
thought
bored
we
of
could
us
give them-
talking about crypto.
This probably hasn't been interesting at all. Cristine will be back next week, just in
will?
case you hated this. Yeah. Oh, did you think you were replacing her
I thought
permanently?
this was my interview.
I
thought if it went well, then I would.
Did I say at the top that she would be coming back, or do people just think this is the Ben podcast now? No, Cristine will be back next week. Sorry, Matt. We'd love to have you back though another time. Maybe the three of us have a party. We could talk about something other than investing.
Yeah, never again.
But okay, let's leave people with something just a little more lighthearted. People bored at home in quarantine.
Yep.
Could you give them like one band and one book to check out?
Okay.
A little nugget of something.
Sure, yeah, can do. And I promise, I recommended a finance book. I won't recommend another
Don't do it
finance
again.
book. Band, okay. For the last couple of years, I've been listening to a huge amount of Emma Ruth Rundle, a musician she's from California, but she now lives in Kentucky with her husband.
Everyone's leaving California.
Yeah, exactly. Leave California, go to Kentucky.
I don't think everyone's going to Kentucky. But,
Hey, Kentucky is great. I don't know, I've never been there. It's
Never been to
probably great.
Kentucky.
The
Got
bourbon's
chicken.
good.
Okay.
All of her stuff is amazing.
All right.
Yeah.
Okay, I'll check it out. I've
just
never heard
out,
of her.
She just put out a song with Chelsea Wolfe, another one of my favorite musicians, like just last week. Yeah, perfect timing to listen to some Emma Ruth Rundle. And a book or a movie. What was the other one?
A book, yeah.
A book. The book I'm reading right now, I really love, is called Dissipatio H.G. It's an Italian
English?
novel
Oh, okay.
that was just published. The English translation was just published by the New York Review of Books.
Who's the author?
It's Guido Morselli, I think. Something like. Should I look it up?
All right, it's good. It's fiction.
It's fiction. It's pretty short. It's 100 and something pages.
I could handle that.
It's about a guy who basically wakes up and finds that all other humans are gone, and I don't know. I'm not finished it yet, so I don't know where this is
No
going.
spoilers. No spoiler. That's
no
interesting.
spoilers. It's great.
I would watch that as a Netflix series or read the book.
Do you want a movie too?
Sure. Hey. Yeah.
Okay.
Okay. Keep.
My favorite movie right now is called The Great Beauty, also Italian. Coincidence?
Didn't you bring this up last time?
Did I? Oh, I don't know.
I think
Okay.
you
Well, it's still my favorite movie right now.
Still your favorite.
Yeah.
Okay. I'll give people a band you introduced me to years ago.
Ooh.
I think they broke up like 10 years ago, but I found I've been listening to them a
Yeah?
little bit
Who is it?
recently. The Silly Kissers.
Oh, okay.
Kind of hard to find their stuff, their first album especially, but the song Stethoscope is a real bop.
Yeah, okay.
Yeah.
This is a band that was from Edmonton.
Yeah.
And they are still around. They changed their name to Tops.
Oh, I did not
It's
know
basically the same band.
that. Okay,
Yeah.
mostly, is it still the female
Yeah,
lead?
the singer,
Okay.
Jane, is the singer. Yeah, and they're Montreal based now. Yeah.
Okay.
And they
Check-
put out an album, I think, like last year, 2020, 2019.
Oh, man.
They're still
I have
around.
Something to discover.
Their best song is called Way to Be Loved, which is also the name of the album that it's on.
Okay.
And that has my favorite guitar riff of all time.
Oh, okay. So check out the Silly
Yeah.
Kissers if you need...
Tops.
Tops, sorry.
It'll be hard to find Silly Kissers. That was like a tiny Edmonton band. You will find Tops, though. Tops is like
Okay.
a much bigger band.
All right, and then for a book, if you haven't gotten enough of the finance talk, I remember years ago after the housing crash of 2008, Matt Taibbi's writing on the housing, on the financial
Oh, I
collapse.
thought you were going to recommend something else.
Oh, no, he's like the vampire squid guy. Do you know Matt Taibbi?
Yeah. I haven't. That quote's amazing. Goldman Sachs is like a vampire squid with tendrils around. I wish I remember the rest of that.
He does, I think, a great job. I remember reading him a lot in Rolling Stone at the time, which I think his essays or articles in Rolling Stone kind of became the book Griftopia, which is about the sort of housing crash of 2008. And I think he's a really interesting writer. Very people always compare him to Hunter S. Thompson. I think he hates that because it puts like these unrealistic cultural expectations on you. But he writes about serious topics like that in a more creative, digestible way, let's say.
Okay. I thought you were going to recommend The Big Short by Michael Lewis about.
I don't think of that as a book because the first thing that comes to mind is the movie.
The movie
right?
is great. That was interesting to me because I said that Sebastian Mallaby, More Money Than God, was my second favorite finance book. Okay. My first favorite finance book, I said I wouldn't do this, I'm sorry, is Liar's Poker, also by Michael Lewis, is the best finance book.
Oh, by the same
guy who wrote The Big Short.
Is The Big Short a good movie for people interested in?
I love that movie. I mean,
it's
like They try to explain some like fancy finance terms using celebrity cameos.
Margot Robbie,
Margot Robbie, and like Selena Gomez, and Anthony Bourdain. May he rest in peace.
Oh
yeah. No, I think that movie's amazing. Also, I just
all right, check out The Big Short.
Big Short's awesome.
All right, apologies to Jenny Nicholson. We were going to have her on again, but we ran out. My brother bumped you again. I'm so sorry.
Oh, I'm sorry, Jenny.
I'm not sure if you saw her recent video about the Vampire Diaries.
It's like 2.5 hours long.
I watched the whole thing.
Good
and
for
I
you.
Enjoyed it.
Yeah,
I really.
She's the best YouTuber right now. Don't tell Cristine I said.
To make that, like, didn't watch.
I've never seen that show.
And you still watched it?
And it was amazing. Yeah.
So we had a sister growing up.
We had a sister?
We have a sister. But I mean, growing up, I remember she would watch like Smallville or like the Vampire Diaries.
Is that what? Yeah.
I remember very passively consuming these shows just because I think she was into them. That's my story and I'm sticking to it.
I don't think I'd ever seen this show before and I hope to never watch it. But I'm really glad I spent 2.5 hours with Jenny telling me all about Vampire
she's
Diaries.
great. I think, do you think she has like such blue eyes?
I wonder about that.
I think
feel like she hasn't always. I don't know if she's doing something with the color.
She's upping the saturation. I think she's pulling like
maybe it's like contacts or she
a
changed
lot of these
cameras.
lifestyle girls back in like 2016 used to just really up the saturation of their videos to make everything brighter and colorful.
Is she a lifestyle channel?
No, but I think she's learned their tricks. I don't know. Everything's too bright and colorful.
Pretty sure she moved and like bought a different camera. There's any number of explanations for this, but she sure does have the strikingest blue eyes.
But I'm a big fan of your content, Jenny. And so is Matt.
Yep. High fives to Jenny.
All right. Thanks so much for tuning in. I guess we'll see you next Taco Tuesday. Christine will be back. I think she might even do an episode with her sister at some point.
Well, it's only a matter of time.
So, we had our bro talk. We talked about, should have talked more about just like chicks and bacon or something, right? What do guys talk about? I don't like bacon that much.
I really enjoyed your controversial food opinions. I'm also one of the anti-bacon people.
Oh yeah. I mean, bacon's all right.
It's fine.
We can have you back on for your.
I don't have a hot take
food
on bacon. Yeah.
Okay, but thank you for tuning in. We'll see you next Taco Tuesday.
What does Cristine do at the end?
She usually turns to the camera and goes waves and says, "Thanks so much for watching. We'll see y'all later. Bye."